All right, it's 10 a.m. Let's get started. Good morning. Welcome to Financial Bootcamp for Small Business Owners webinar by Ms. Lorna Whitaker from Business Beyond the Shoebox. Today is the very first session of the four-part series on Money Smart Business Solutions. And we will focus on basic bookkeepings and accounting today. My name is Jeannie Yang, and I'm a business and loan counselor at PACE. Thank you for joining us today. This webinar is brought to you in partnership with the City of LA Economic and Workforce Development Department, EWDD, and BusinessSource, Pico-Union Westlake Region, operated by PACE Business Development Center. This webinar will be recorded, and at the end of the webinar, you'll be asked to participate on our survey. So please make sure you complete the survey at the end. And before we learn something new today, let me do a quick introduction on PACE. Pacific Asian Consortium in Employment was founded in 1976, and we are a 501c nonprofit organization. We help out businesses and workforce development to utility bill assistance, housing, and education. Our 5 departments are equipped with necessary services to tackle poverty and economic inequality in diverse communities across LA since 1976. So we provide one-on-one business counseling, credit and asset building, business and financial plan development, webinars just like today, and training to help you establish a brand new business or to help your existing business. And we can also guide you to get into the procurement contract through our procurement department. And the greatest fact is that all our services are free. So if you have any questions about our services, landing products, or any of the program, please visit our website, pacelabdc.org for more information. All right, let's dive into our topic of the day. It's a pleasure to have you with us, Lorna. Let's get started.
Awesome. Thank you so much. I'm really excited to be here today, folks. I hope that you are too. I hope that you understand the value of learning your numbers. A lot of people struggle with math. In fact, the statistics show that maybe 3 out of every 4 people really don't think that they understand math. The good news about bookkeeping is it's no longer really about math because the software will take care of most of that for you. It's about seeing patterns and about developing really good habits that support you. Today, we're going to be covering a fundamental element of bookkeeping and accounting. So I really want to get into this, and we're ready to get started. So, all right, today's topic is the ABCs of bookkeeping and accounting. Your numbers are your compass. Financial success is your destination. Now, for some people, when we start talking about money, they kind of have a knee-jerk reaction about it. I'd like you to know that you started a business to make money. You started a business to succeed. Never forget that. Sure, you want to provide a service. You may have a passion about what you do. That's perfect. But in order to be sustainable, to have a future for yourself and for your business, money is going to be a part of that. And so today we're going to cover really what you need to know to get you started. Or if you've been in business for a while, let's make sure that you absolutely know these things because they are the building blocks. I have to provide this disclaimer. I'm a small business consultant. I'm a financial strategist and a skills trainer. I'm an educator. I'm not an attorney or CPA or licensed tax professional. I cannot and do not give legal or tax advice. I empower others by sharing with them the proven techniques and strategies and skills that today's entrepreneurs must use to create businesses that are sustainable. Okay? None of us was born knowing this stuff. And it's time business owners had the financial and business skills necessary for creating profitable and well-run businesses. It is my experience with business owners that they miss this fundamental training. Okay? And I'm here to make sure that every business owner gets it. So this is a real simple thing. Savvy entrepreneurs make more money. Just the way that it is, folks. And my purpose is to show how you can transform the way you manage your business. When money management becomes easier and more efficient, it takes less time. With more time, we get to have a life we love doing what we love. It takes more ambition and hard work for us to achieve our goals. You need to know how. For the past 3 decades, I have been curating the very best, most effective strategies, insights, and tools that are essential for making and having money. A little bit more about me. So my intention is to inspire you to make money management a natural part of your everyday life, to empower you with the tools and skills that make it simple and effective, and to guide you on your journey toward building a thriving business and a comfortable financial future. How can I do that? Well, I tripled my business income my second year in business. I learned how to do that. I help clients create financial stability and extraordinary growth. I've been doing it for 15 years. I've had 2 clients go from being local startups to international contenders. I just provided the guidance. They did the work. I have led more than 600 in-person and online workshops since 2008, and I estimate that I have trained over 1,500 entrepreneurs. Okay, I hope you're ready to get started. You can take notes if you like. Just kind of follow me along. You will get a copy of the slide deck. I will send that over to PACE, and they will make sure that you have it available to you. Okay, so today we're going to cover first things first, software considerations, terminology, bookkeeping basics, tools, tips, and systems, and best practices. And I know that's a lot. One of the things that I would share with you is that money management takes less time than you think it does. It's easier to do than you have been told. Once you understand the basics, once you know which questions to ask, okay, things start getting easier. Do not stay stuck. PACE is here to help you. If you need an outreach, ask them. I'm here to help you. Let me know how I can do that. So first things first, financial savvy is learned. None of us are born knowing this stuff. 81% of business owners handle their finances themselves. Fantastic. That's absolutely perfect and completely normal for small businesses. The challenge is that 66% of small business owners wish they knew more about their finances, and they don't do anything about it. I really applaud you for being here today to learn more about this piece. But the information is not at all valuable if you don't apply it. So that's my goal for you, is to get the skills, get the knowledge, and then start applying it. So welcome. This is a scary statistic. Low financial literacy costs small business owners an average of $118,000 in lost profits. Once those profits are lost, they're lost. You'll never make them up. So the sooner you apply money management and bookkeeping and accounting principles into your business, the sooner you'll start being profitable. This is important. One of the most important things that you can do for your business is keep it clean. You need a business checking account, one that you're using solely for your business, not a personal account that you started your business and started putting your deposits into and paying your expenses from. Now, in the early days, there's a little bit of forgiveness for that, but very soon after you start your business, you need a business checking account. Now, some of you may go to a bank and they may give you difficulty about that. I want you to know you want to ask for business checking, because the services that are provided, the ability to sync up with the software that you're going to need to use for your business, okay, Those are provided by business checking accounts. They're not typically provided by credit unions or personal accounts. You need a business debit card tied to that account that you use only for business purchases. Commingling is a real problem as your business grows. Again, there's a little bit of forgiveness in the earlier years of your business, but as your business grows, and if you become a corporation or LLC, it becomes very important that you're not commingling funds. That means personal and business funds, and a business credit card. For those of you who might not be able to get a quote unquote business credit card, get a personal card. You can have two. I have one in my wallet and one on my desk for making purchases that are related to my business. They can still be a personal card. I just use them for my business. Let's talk a little bit about software. One of the premium softwares out there for bookkeeping is QuickBooks. I have a love-hate relationship with QuickBooks. It's powerful, it's effective, it's designed for business owners. It's absolutely fantastic. However, it's gotten very expensive. Yet it is also very powerful and very user-friendly. Their prices change all the time. Every year they go up. What you're seeing on the screen is just a more recent one that I grabbed. This is for the only remaining desktop version that's available. It's the QuickBooks Enterprise. They've stopped all their other desktop versions. They all want everybody to be on the online version. And we're going to have some trainings here over the next few months through PACE where you can learn how to use this software. But it is still a premium software out there, but very expensive, as you can see. Their online version is only slightly more affordable. Simple Start is their lowest grade level of QuickBooks Online. I don't think that is sufficient for most businesses that plan on growing. And I do think that it's worth paying an extra amount of money per month because the intention is to grow your business, to make the need for that customer favorite, the QuickBooks Online Plus, to make that one the best option for you. Okay, so some need the advanced, most do not. Check them out, make sure that they meet your needs. Navigating from one type of software to another type of software takes a lot of time. And so time is not something that we can renew or get more of. So I actually believe that selecting a mid-range software is the better fit for you. There are some other software options depending on your business, depending on what you need. Okay, so here's a list of them: Wave, Zoho, Xero, and I think that's a New Zealand product. It seems to be much more affordable and seems to have a lot of features like QuickBooks. And then we have one that people keep going, oh, well, Quicken is just so much more affordable. Okay, don't use Quicken. Quicken is designed to handle personal finances. It's not designed, was never developed to support businesses. And people who think that they can get into Quicken because it's more affordable frequently find that after even a year or two, it doesn't do the job. My belief about this is that you should plan on outgrowing its usefulness. So please don't use Quicken. Now, I did provide, there's a little link down at the bottom. It will be available to you in the PDF version. I have a little guide on bookkeeping and accounting software to give you some more information if you're at all interested. And I did see a hand go up. I can answer a few questions as we go. Got the chat. Okay. Okay, so I do see that someone has been using Quicken for years and you may be able to make it work for you. I just know from experience that it is typically a mistake for most business owners. So thank you for letting me know that you've been using it. Somebody asked about Wave. I'm hearing good things about Wave. If it serves your business, excellent. After we're done with today's presentation, you're going to know more about whether these software serve you. I guess today and Thursday's presentation. These two presentations are really going to help you decide what software serves your business, because it's not about where you are today. It's about where you expect to be in a couple of years. Okay, the software needs to support your goals and objectives. Let's get into some terminology. Okay. Bookkeeping tracks the transactional detail of a business and must be accurate for it to be useful. Okay, these are the transactions, the deposits that you make, where they came from, whether they were from a refund, whether they were income, what the expenses, whether you want them to be costs of goods or whether they're expenses, or whether they're part of was an owner's draw or a shareholder's distribution or the purchase of an asset. All of this information must be done accurately, or when you go to read your reports, the accounting version, the accounting portion, you're not going to have usable information. So accounting is that big picture view, the CFO part, which means Chief Financial Officer, which is the term that regularly is provided for the treasurer of an LLC or a corporation. The reality is that you are the Chief Financial Officer of your company, whether you're a sole proprietor, a corporation, an LLC, or even a nonprofit. Folks, you have to know your numbers. This is really important. And the good news is it doesn't take a lot of time. Okay. And by that, I mean 20 minutes a week. Bookkeeping can take longer than 20 minutes a week. Looking at your numbers doesn't take longer than that. Okay. So you want to know where your money is coming from so you can make informed decisions. You want to know where your money is going to so you can make informed decisions. Okay. And then you know which steps to take. You need to know what needs to be fixed, and your numbers will tell you that. So with the bookkeeping, garbage in gives garbage out, and you as the CFO will not be able to make informed decisions without good bookkeeping. This comes up as a question all the time. Well, I've heard accrual. What is accrual? What is cash basis? I don't understand this. Okay, great. Reason most business owners don't understand accrual versus cash basis is that most business owners function in the cash basis world. So they never get much training on accrual, and they don't understand the value that it can provide for your business. Okay. Most businesses are taxed on cash basis. If your home and your personal finances are run on cash basis, the money that you have available, not what you might be earning. So accrual basis is it tracks the transactional detail by the amounts paid, amounts due, okay, which is accounts receivable, and the amounts due to others, accounts payable. So if your company sends out invoices and they're not paid on the spot, they sit over in accounts receivable. That is money due to you later, okay? On accounts payable, the same thing. If you don't pay your bill right now, okay, you record it as being due and it sits in your books. When you run an accounts payable or a profit and loss or a balance sheet based on accrual basis, it tells you what's due to you and what you owe to others and the financial health of your business based on sales and expenses overall. It's different than cash basis because cash basis tracks the transactional detail by the amounts actually paid and the amounts actually received. The money you have deposited, the checks that you have written, the electronic transactions that you have made. So that's cash basis. And most businesses, again, 99.999% of them are taxed on a cash basis. But we use the accrual basis to run our businesses. So we're looking at both of those kinds of reports in order for us to run our business. Not understanding how to use an accrual basis profit and loss, okay, keeps people from being able to make, again, those informed decisions. A few more accounting terms: revenue, sales, income. Typically, they all mean the same thing. People kind of use the words differently, like how many sales did you make today? Well, that might be the number of sales that you made. Your revenue, well, how much is that? That's probably going to be in dollars, okay? Income is recorded and measured in dollars, okay? And it is only from the goods and services that you sell. That's all that revenue is. It's that. Refunds are not income. Money that you take out of your personal pocket and put into your business is not income. Income is the money you receive from the goods and services you sell. Gross profit. Now, some of you may not have costs of goods sold. Okay, frequently shorthand is called just COGS. Okay, so COGS are things like if you sell inventory, and we're going to cover a little more of that in a little detail as we go along. But it's money that is tied, or expenses, monies you pay for the money you earn. And my best example is merchant service fees. Okay, if you don't have inventory, you're going to have merchant service fees. And merchant fees are when someone uses a debit card or a credit card and you have to pay those fees. You don't pay those fees unless you've made a sale. Okay, so that's how that works. That's what COGS are. Gross profit is the revenue number less the costs of goods. And then you have your net profit. Most people understand this one. They have done it long enough. They understand that it's really the net profit is whatever is left after all the expenses are subtracted from the gross profit. Okay. If you don't have COGS, your gross profit is actually equal to your revenue, same animal. And so then what is my net profit? It's after all of my expenses. Okay. Profit margin is a little more advanced. However, I want you to know it. So when you hear it, you go, oh, I know what this number is. It's the net profit as a percentage of the revenue. So, what it's saying is, what is your profit margin? I made this much money. It cost me this much to make it. What's that percentage of that relationship? And you can find instructions on how to calculate that online by just asking for it. Just know that your profit margin is a way of helping you to measure your pricing. It's a great tool for helping you with your pricing, particularly if you use it on using COGS, subtracting the COGS from your revenue and using that gross profit number from your revenue. So hope that's not too complicated, but I want you to know these terms so that when you hear them, they're not completely alien, and that you just kind of go, okay, I need more information about that. Okay, let's get into bookkeeping basics. So your financial house is going to be built upon your bookkeeping. Your bookkeeping is tracking all your numbers so that you have information that's usable to you. Okay, this is, again, a fundamental tool and cannot be ignored. I had a gal who was saying, oh, you know what, I'm getting ready to, I'm going to really grow my business. I'm going to be in making 100,000 to 200,000 a year. And she said, but I'm just still doing it in Excel. And I said, look, I think you're going to struggle using Excel because it's going to take you more time to do the data entry, and you're not going to get usable information for growing your business. So I think you really want to be looking at software. Build your house on systems and structures that support growth. Okay, here are the 6 building blocks of money. Some of these are familiar. Some of these you may not be clear about, and you've probably heard them all. What I want to be sure of is that you have these tools, that you understand these terms in a way that business owners need to understand them. I will refer to some personal kinds of experiences that you have so you can connect the dots on them. So the chart of accounts is the list of all the accounts that you use in your business to keep track of your transactions. Okay, and I'm going to give you more information on how that looks as we get into it. But Your transactions all fit into one of these 6 boxes. And when you get more advanced and you encounter something that you're not sure about, this is the time where you go, wait a minute, I know that it's not income. Let's say I know that. Then if it's not income, what is it? And then you go, well, is it a cost of goods? You'll go, no, it's not a cost of goods and it's not an expense. What is it? Then you start going, okay, does it fit into one of these other categories? I need to look at it more carefully. And again, some of the tools that are out there, the AI tools, the internet, you can ask these questions and get some really good information. Ask your tax professional, ask another business owner, a business consultant, ask some PACE consultant. They will help guide you. But it is your responsibility to learn these terms so that you can use them to empower you to financial success. So, chart of accounts, it's broken into 2 categories. What do I see on the balance sheet? What do I see on the profit and loss? Again, most business owners are familiar and comfortable with what's on the profit and loss side. What they're not familiar with is what's on the balance sheet side. The balance sheet measures the life of your business. It's a big picture view of your business. Okay. The profit and loss side is kind of on that, how much money you're making, are you profitable, and what's taxable. So what I have found over the years is that far too many business owners dismiss the importance of the balance sheet and they don't learn what they need to know. Again, most of it's pretty simple. So they don't learn what they need to know. So they're always kind of off balance. Balance sheet. So what's on the balance sheet? Assets. Okay. Assets, the things that you own. Liabilities, the things that you owe. Equity, the difference between the two. Income, we've just covered that. Earnings, cost of goods sold, and expenses. And everything fits into these 6 building blocks. All right, here's more information, what you would be seeing with a sort of a mini list of the kinds of accounts fit here. So here we go. Assets, something belonging to you. Cash, inventory, furniture, equipment. You understand this. If you own a house, you own a car, okay, that's an asset. It can be tangible, which means it's got a physical presence, but your goodwill is also considered an asset. You don't see it on your books, but I just want you to know that it is. So what kind of accounts? Well, you have your bank accounts, savings accounts, checking accounts. You have your payment service accounts, PayPal, Venmo, whatever, these other outside accounts, Square accounts. Accounts receivable. These are for people who do their invoicing. Accounts receivable keeps track of the invoices you've sent and the invoices that are paid. And that just does, the software does all of that for you. Okay. This is why software, I think, is a really important element to have for your business. Inventory. This is the goods that you buy to resell. Not every business has inventory, but it's worth talking about so that we know that we're paying attention to it. And then your fixed assets, real property, furniture, fixtures, and equipment. So these things are not deductible as an expense when purchased, but they do get deductible over time. And that is, again, an advanced conversation. However, this is where they live. Okay. They live under the assets of your balance sheet. Liabilities, something that you owe. Okay, you understand that. If you buy a house, you have a mortgage. Most of us, when we buy a car, we have a car payment. Okay, so something that you owe. So a debt, a bill, a loan, credit cards. Okay, now accounts payable, that's where most of your bills get posted if you don't pay them immediately. I do encourage you to use your software to record things that you owe so that you can do your money management more effectively. This becomes really important when cash flow gets tight, and it's a good habit to get into. What are my accounts payable? Who do I owe? Your credit cards will be part of your business. If you pay it off in full, great. If you don't, then you want to be able to manage it so you know what that debt is, and you're going to be reconciling that account. You're going to be paying attention to that account just as you would your bank accounts and saving accounts. Okay. Sales tax payable, I threw that in there for businesses that collect their taxes. This keeps track of it for you when you make your sales. Sales taxes don't show up on your profit and loss because they're not part of your income. Even though they paid you, they're not part of your income. So they live over on your balance sheet and you pay them as you go. Okay. Notes payable, this would be for any loan that you might have taken. Money that you borrowed from a family friend. Okay. Notes payable, this is who I owe. They're also known as loans. They can be a line of credit. They have lots of different names. Don't worry about the names. Be more concerned about what it really represents. It's a liability. It's something that you owe. Equity. Of all the parts on the balance sheet that give business owners the biggest concern and difficulty is equity. They don't really understand it. It's a term, and so they gloss over it without really understanding its importance. From a review perspective, it doesn't have as high a level as important as what's going on in your assets, your bank accounts, and those kinds of things. But there is an important piece to this, which I'm going to cover right now for you. So equity is the difference between what you own and what you owe. If you've ever bought a house, if you've ever bought a car, you can understand that. If you buy a car and it's $30,000 and you put $5,000 down on it, okay, that car is still worth $30,000, okay? However, you owe $25,000 on it. So the equity is the equity of the cash that you put down, okay? Now with cars, they depreciate and they don't always line up with what its current value is and what you may still owe on the car. Same with mortgages, owning real property, they go up in value, so that changes. That's why people get kind of confused about what equity is. But the shorthand version is it's the difference between what you own, the value of the asset, and what you still owe on the asset. That's equity. Now, one of the things that I have found in a lot of today's software is the owner's equity, okay, is regularly misses this part about the owner's contribution. So I make a really big point about this. They always seem to say, oh, there's an owner's distribution, there's an owner's draw. Oh, yeah, we see all that. But they forget to say that in the real world, business owners put money into their businesses. Where does that money go? It is not income. I have found way too many businesses that they don't know how to record the deposit that they make into their businesses that came from their own personal pocket or even a loan. Okay. And they think that it's income. Income is only the money that you make for selling your goods and your services. Okay. If you put money into your business from yourself, from your personal bank account, personal savings account, your IRA, wherever it comes from, if it's your money and the business didn't earn it, it's an owner's addition. It's an owner's contribution. Now, the money that you take out of your business, okay, and for sole proprietors, you can't get a payroll check. Okay, for corporations and LLCs, you can. And that's, again, a little bit of a different conversation, and we'll cover that. The thing is that any money that you take out of your business, you just go to the bank and you draw the money out of your bank account, that's an owner's draw. If you buy something with your corporate money or your business money, and whether it's on your credit card or a debit card or whatever, and it's for your personal use, that's an owner's draw. Okay? If you have a lot of that going on, the IRS takes a very dim view of that. So we like to minimize that commingling. Retained net earnings. It's called net earnings. It's called retained earnings. It has several different names depending on the structure of your business, however, whatever software you're using. Basically, what this is it's the net, the total of all your profits and all your losses every day, every month, every year. It tallies them up for you because the balance sheet is managing your financial health for the life of your business, not just by 1 year, not by just 1 month. It's managing it from every aspect of from day one of your business. So most people, they look at that. It doesn't have a whole lot of relevance unless they're looking to sell the business. And then it gets real important. The income, this is the one that most people understand. Okay. It's what you get paid for what you do. That's it. It's going to be revenue for services, revenue for products, and if you have returns or allowances or discounts, okay, or refunds, that is actually an income because it reduces your income in a very direct way. It's not a cost of goods. You're going to have at one account, bounce checks, things like that. Anything that directly impacts your income may be subtracted from the income right at that place, okay? Cost of goods, we covered that just briefly. These are costs, expenses that are directly tied to your income. So if you have inventory and you sell your inventory, they get subtracted there. It's the cost of what you paid for those is in the cost of goods, and what you received for those is in the income, okay? Direct contract labor. So I've got direct contract labor and direct employee labor here as a point of conversation. The IRS doesn't have any particular rules or concerns about whether you keep these types of expenses under cost of goods or whether you have them as an ordinary expense. For you as a business owner, this is going to help you with your pricing. So you may want to have this information here under cost of goods rather than just in a generic expense category further down on your profit and loss. So I like to at least have a conversation here about, do you have some direct contract labor, okay, for your business? So let's say you're build homes, and so you have this income, but you pay to have the drawings done, and you hire someone to do the drawings for you. That might be the direct contract labor. You'd pay those for those drawings, okay? Direct employee labor, that one is, I worked with a landscaping company for a few years, and one of the things that they did was a lot of just the mow and blow. Just go in, mow the lawns, blow the leaves, take care of it. The people that they hired to do that, we kept their labor right there under cost of goods because it helped us to know this is the income we get for this. This is the direct cost for that. Are we charging enough? Okay. It's a little more complex because you do have some overhead to think about, but this helps you to really stay on top of it. And then the merchant service fees, which I mentioned earlier, these are fees that you incur when someone pays for your goods and services with a debit card or a credit card, okay? Something other than a check, which you could deposit, don't have merchant service fees. I like to see them here. Why? So I can manage that particular cost and know how much I'm paying percentage-wise for the transactions. Maybe I want to find out if I can get a better deal. Okay, I'm seeing some questions in chats, and I will address each of those. I'm glad you're putting your questions out now and concerns out as we go, because that's the easiest way to handle them. So I can kind of go through those at the end. So thank you for doing that. Okay, expenses. What it costs to run your business, okay, whether you make money or not. Okay, advertising and marketing. You're not guaranteed of making money. Computer expenses, contract labor, dues and subscriptions, insurance, internet, office supplies, payroll, professional fees, rent, telephone, and so much more. Okay, this is just a short list to help you get an idea. That's what goes on the expenses, what it costs you to run your business, whether you make money or not. And here's a much longer list. I'm not going to go into the detail on it. It's just for you to get a really good idea of some of the things that people have on their chart of accounts under their expenses. You can have more, you can have less. What serves you best? How will tell you information that's useful for you? Doesn't make your financial stuff too complicated. You want it to be accurate. You want to be able to use it as a measuring stick for your financial health. And you'll also see that I've organized them here by, like, advertising is broken down into 3 different sections. Automobile is broken down into a few things. I like the insurance that related to my automobile under my automobile expense. Okay. Yes, most businesses use mileage, but that's fine to track it here. Your tax professional will help guide you on how to do this best. But I like to see what it's costing me. As a business owner, I want to know what that expense is. Even if it's not fully deductible from my business at tax time, my books are for me as the business owner to run my business by the numbers. Yes, I give this information to the tax people, but this is not who they're for. They are for you. These names need to be meaningful and useful for you. Okay, this is not for your tax professional either. This is you design this information so it's usable for you to run your business. And this is kind of what it looks like. This is kind of a snapshot of what the chart of accounts looks like. What's on the balance sheet side: assets, some detail, liabilities, owner's equity. Over on the revenue side, costs of goods, expenses. This is just a little snapshot to help pull all this information together so that you can see it in a more usable way and start kind of coalescing all this information. Okay, tools, tips, and systems. Okay, let's talk about some of the things that are going to make your life easier. Bookkeeping and accounting software, same animal, by the way. Okay, so people had asked a little bit about some of the other softwares that are available. Bookkeeping in and of itself is very useful. However, business owners need to be able to have the reports. And this is something that I think is not emphasized enough, that you don't just need to be keeping track of it. You need to be able to use the information. Okay? That's the why of why you do the bookkeeping, is so you can use the information for yourself. Okay? It's not to have your taxes done. It's for you. You need multiple ways to get paid, to be paid. Okay? Bank accounts, credit cards, payment services, etc. You need an invoicing and billing system. Somebody had asked about Wave. Wave started out as being a really top drawer billing system. I think it still does a really great invoicing system. They have advanced their services to include more, which is why Wave is getting such good reviews, is that it's starting to serve business owners in a bigger way. You need something to help you with expense tracking. There's always somebody out there trying to sell you something about tracking your expenses and keeping track of your receipts and all this other stuff. Don't go overboard. The more you add in to taking care of your money, it can get more complex. Get what you can use, what serves you, and keep it as minimal and as simplified, efficient, and effective as it can be for you. Because adding on tools you won't use just makes you crazy. You really want systems that work for you, and regular, good bookkeeping and accounting software will meet all of those needs. Okay? A receipt management system. Electronic is best. That means you just have your bills emailed to you. You just archive and save them. Don't turn this into a big nightmare for yourself. Your bank account, your credit card statements are really, really useful for protecting that information. If you're commingling, you might end up having to explain yourself a little more carefully, but generally, if you're not commingling, your receipt management system can be very, very simple. You need something for site and password management, however that works for you. Money management calendar, when things need to be done, know when your taxes are due, know when estimated payments are due, lots of different things to help remind you. Even if things are set up on auto pay, you need to know when they're leaving your bank account. So a good money management calendar. Simple calendars are easy. Okay. QuickBooks has calendars within them. I don't know if the other softwares do, but they'll have little reminders and ticklers for you. Payroll services. My encouragement for today's business owners is do not try to do payroll solely by yourself. Okay. I find that Sure Payroll, Gusto, and QuickBooks services work just fine. The QuickBooks software where you do the payroll yourself is strong, powerful, and efficient. The problem that I'm finding for too many business owners is that they're misfiling their reports on time. They miss paying their taxes on time. Using a service like Sure Payroll, Gusto, or the QuickBooks payroll service, where you just put in the details. You add your employees, you add their hours, you add their vacation, you add their sick time. You do all of that, or someone you hire does all of that for you. But they pull all the money, they pay all the taxes, they do all the reports. It's going to save you a lot of headaches in the future. A bookkeeper. You're going to either do your books yourself or you're going to hire somebody to do it, but there's no in between. Okay. So I encourage you at some point, hire a good bookkeeper. You're going to need a CPA, certified public accountant, or other tax professional. I recommend getting business consulting support one way or another, and an HR consultant, which is a human resources, so that you're not making any missteps when you hire employees. This is an important part of your business. There are a lot of pitfalls on the employee aspect. It's completely doable. Just know that you are probably going to need help. Okay, we're going to get into best practices. Here we go. Use accounting software. Set up a bookkeeping protocol. That means when are you going to do your books, and stick with it. If you get behind on your bookkeeping, get it caught up. Reconcile your bank account, payment services, and credit cards monthly. If you have an in-house or third-party bookkeeper, be sure you receive timely reports. You want to get those profit and losses and those balance sheets, and you spend at least 20 minutes a month looking at them, looking for patterns, getting familiar with this stuff. Okay. Also, be sure that you look at the accounting software yourself. Okay, get familiar with logging in and just nosing around. You want to be sure that everything is being reconciled and being kept up to date. It's really important for you. Getting your reports on your calendar and review, again, no less than monthly. Minimize commingling of funds. Learn bookkeeping basics for yourself, which is today's workshop is that beginning piece for you. If your bookkeeping is more than you can do or will do, hire help. You're the CFO of your business and solely responsible for the accuracy of your books and the financial health of your business. The buck stops with you. If you're a small business or startup, monthly bookkeeping should be enough. If you only have 10, 20, 50 transactions a month, you can do your bookkeeping monthly. Don't stress about this, all right? But do it. If you're a more established business or struggling with cash flow, do your bookkeeping weekly. And I really encourage doing your bookkeeping weekly. It makes it easy. It makes it available to you. You have the information. You remember better. Oh, what was this for? Oh, I know what this was for. Okay, you put that in right now. I do really encourage no less than weekly bookkeeping. Only big businesses require daily bookkeeping. What's most important for you as a business owner? Focus on revenue relevant activities every single day. What brings money in? Do I have invoices to collect on? Do I have bills to pay? Do I have a networking event? Do I need my bookkeeping caught up? Do I need to get a bank statement? Do I need to reconcile? These are all revenue relevant. They're all part of your money management regime. Financially savvy business owners make more money. They do. They just do. Learning to take care of your financial health of your business is like learning to ride a bike. First, you need to learn how to do it. Then it takes practice before you will ever become easier. Knowledge without application is worthless. So these are some tips on what effective bookkeeping will do for you. It will improve your financial health. It will protect your business from theft or costly mistakes. It will provide reliable data for making informed decisions. It will help to create financial predictability. It will help you budget and manage cash flow, allow you to plan for and measure results. It will make tax season easier, and it will save you time. A couple more statistics for you. According to Intuit, they're the makers of QuickBooks. Over 80% of entrepreneurs manage their business finances on their own. Well, we already knew that, okay? It's right there, okay? But the SBA estimates that 60% of all businesses fail not because owner lacks passion or good ideas, but because they lack the expertise to effectively manage their resources, their time, and their money. 60% of businesses fail because of failure to manage time and money. Money management is the gateway to abundance, and it's a skill you've got to master if you're going to make financial freedom a predictable and achievable outcome. I'm really passionate about this, as I think you can tell, that this is how we do it, folks. Business owners who learn how to manage their money just do better their entire lives, and they have comfortable retirements because they have money to travel, to put kids through college, to have homes that they love, to whatever they want, okay? A life that you love. Okay, wait, there's a little bit more, and then I am done. We have some more workshops coming up. We have another one on December the 11th. This is how to read financial statements. Again, how to use this bookkeeping data. Then in January, we're going to do budgeting and cash flow management. And then we're going to do forecasting and planning for growth, because growth doesn't happen by accident. Okay, these are really 3 more of this 4-part series that I encourage you to attend. If you're not already registered, get registered. Okay, so one other thing, traditional business education typically ignores a simple truth. Systems, structures, and skills alone aren't enough to get us across the finish line to financial success. In fact, they only account for about 50% of the success equation. Our beliefs systems run everything. If you think it's possible, it's possible. If you think it's not ever going to happen for you, that's the result you're going to get. So business owners must also learn how to embrace the positive, empowering beliefs that support making and having money. So I want you to know that the possibilities for achieving a life of joy, purpose, and financial success are limitless. When you embrace this, you can achieve everything that you want to achieve, everything that is your heart's desire. So I have a little gift for you. The link will be there in the PDF when you go grab it, if that's something you're interested in. And I would love to start going through the chats, but please feel free to start adding, and I will answer your questions for as much time as we have available.
All right, thank you so much, Lorna. That was so much great information. All right, the first question, are grants considered income? Did we answer that?
Yes and no. That's a great question. It's a yes. So one of my favorite terms came from another tax professional. She goes, well, it depends. So money that you get from the IRS or the federal government might be taxable to the state. Money that you get from the state or a city might be taxable for the IRS at the federal level. And then if you get money, grants from foundations or whatever, or from cities, those kinds of things, they can be. So I typically put those in as other income on my profit and loss report. I have an other income which occurs at the bottom so that I can specifically address that question with my tax professional so that I know what the rules are? So great question. Thank you for asking it. So it depends, and your tax professional will guide you on that. Okay, I see. I'm going to kind of start here at the bottom. So D asked, are reimbursements considered income? If we pay $100 for rent and another organization that shares space with us reimburses us 100%, how should we record that? I would record that under your income category as one that reduces your, reimbursement. So give me a second. I want that under, so yes, technically the reimbursement is considered an income, but it reduces the overall expense that you paid. So what I would do for cost sharing is I would post that as a separate account item. So you'd say, okay, I pay rent. Here's my rent payment. Rent share reimbursement as a second one, and it actually reduces it. So your deposit goes into that, and it would actually reduce it. And you'll see one go in as a positive number and one come out as a negative number. So in the bookkeeping part, that's how I would address that. Otherwise, you can put it in as income, reimburse it for expenses. Your tax professional will guide you with that. So great question. That's one of those more complex ones. And this is what happens for business owners. This is why you want to get these fundamentals down so that you're starting to ask good questions about the unusual stuff that you're encountering. Okay. Looking up here to see.
Okay. So with an LLC, you can't go to the bank and withdraw like the owners usually withdraw.
That depends on the bank. Typically, they're not supposed to, but here's the thing. If you're a single member LLC, you should be able to walk into the bank and make a withdrawal. But the banks are not supposed to just allow cash withdrawals from your corporate or LLC account, but I see them doing it all the time, particularly for smaller banks. That's something that they do. So most people just use the electronic version and they just transfer the money from their bank account to their personal account. Okay, or they write a check to themselves and they just deposit into their personal account. It can be a little trickier with that corporate legal structure. And so it really falls to the relationship you have with your bank, whether they will allow it or not allow it. And it's, it can be the training of the teller that you walk into. That teller may have been told, oh no, if it's a corporate account, they can't withdraw any cash. So, it's a challenge for you. You just have to navigate that through the way your bank intends for you to behave. So it's a good point. It's a good point.
All right. Where do we get your ebook?
Oh, well, let me just see here. I think I can grab up that. See if I can open the link. Let me see if I can do that here. Let me copy the link. Here we go. Let's see if that grabbed it. There you go. Okay, and then the code is on here. So let me.
Okay, we got it.
You got it. All right. So
yeah, got the link.
So on that, and it will be on the PDF as well. I got it here. Just a second. When it pops up, it'll give you the ebook code.
Okay.
So it'll also, the link will also be there on the PDF when it comes through. It's a clickable link that's in the PDF.
That's awesome. I have another question. What is the difference between non-qualified dividends and qualified dividends? And are they put on considered retained earnings?
So that question is typically on the personal tax side. Okay. So that one you can look at. So the non-qualified, I believe, means that they're taxable. So I don't know the exact answer to that. I would have you ask your tax professional that exact question. But dividends are not, your investment accounts are not typically part of your business account activity. That is a personal piece. Just as with your taxes, your personal taxes, some people pay them out of their businesses, but personal taxes are not a burden of the company. Okay. Even if the company pays them, they are a shareholders or an owner's draw. Okay. And a lot of people do. They pay their taxes out of their business accounts. Fine. But they are not an expense to the company. And it's very important for you to get clear about your personal taxes are not a business expense. Payroll taxes, yeah, they are. Okay. The corporate taxes that you pay to the state of California, if you have an LLC or corporation, those are, but personal taxes, even if they're paid out of your business, are not a business expense. And I don't give
Okay.
tax advice. Just
All right,
information.
great. So PDF of today's webinar will be available, and I'll
Yeah.
send it over to you once Lorna, kindly sends it to me. And the recording of today's webinar will be available later time under our website. And, just Lorna mentioned, today is the first session of this a four-part series. And we have the next session coming up on December 11th at the same time. And we'll talk about financial statements. So make sure you join for that webinar as well. Is there any other questions?
I'm just looking to see if there was anything else in the chats. But yeah, if somebody still has a question, there's 7 new messages. So let me go here. Okay. So the thing is that, so yes, I am available for one-on-one. The thing is that I am a fee-based consultant. I'm not part of the PACE organization. So, if that's something you want, well then great. Just reach out to me. My email and stuff is there. Let's see. My question on 1-800-accountant.
Yes. There was a question by David. Those 1-800 accountant. I know that they offer a variety of services: tax planning, HR, CPA support. What are some of the qualities of a strong CPA partner? So he's just curious that, those 1-800 accountant, services, are they worth?
Okay, so everybody is trying to sell you something. Okay, let's just get real. They're trying to sell. So they're all trying to convince you that they are the ones to go to. If you don't understand your financial piece by yourself, if you don't already get some training, no matter who you go to, you're not going to be sure that you're getting quality services because you actually don't have enough information to know whether they're providing good services. If you're needing a 1-800 accountant, what is your need for them to provide? Okay, so tax information should be coming from tax professionals, or go to the websites, Franchise Tax Board for California, the IRS.gov tax. You can get your questions asked and answered right there. If you're concerned about how to do bookkeeping transactions, if you're looking to understand your financial, statements better, well, today's workshop is step 1. Tomorrow, Thursday's workshop is like the second step. You're going to start learning that stuff. Talk to a tax professional. I think that most business owners can get the information that they need by asking the right person. If you don't have a tax professional to help you with your business, it's time to get one, because taxes are going to be due very, very soon. And you want to get into that queue right away, because a lot of CPAs and tax professionals, they don't take new clients after February. So you want to get on to that. An online accountant, if they meet with you, they explain things to you in a way that you understand them, then I don't care what the resource is that you get. You just want to know that they're reliable and trustworthy. You would never provide access to things like your books, your bank accounts, anything like that to them. And so a lot of these companies, or some of these companies, are fishing for information that they've got you they've given you the hook, they've got your attention, you're reaching out to them. If they can provide the services that you need and want, great. But be careful about giving them anything confidential. I much prefer local CPAs and tax professionals where you can walk in and talk to them if you need to.
All right. Thank you so much, Lorna. We have passed our time. It's 11:05.
Well,
We're
I
gonna
know.
have to wrap up right now.